Our next speaker, Mr. Oliver Chinganya, from Director of Africa Center for Statistics, will be speaking with us now. Over to you, Mr. Oliver.
Thank you very much for having me, and I'm glad to be here. I'll be speaking on behalf of the Executive Secretary and the Undersecretary of the UN Economic Commission of Africa based in Addis. She's not able to join, so she sends her sincere apologies for this. So on her behalf, I would like to really say that it's a great honor and privilege for me to speak online for this Sudanese Fintech Summit Virtual Expos, which will take place between today and tomorrow. It's my privilege to congratulate all individuals involved and the ministry in charge for bringing this agenda on the table, as it is an enormous impact to modernize and impact the financial sectors of the African continent. Economies around the world are suffering as a result of the pandemic, and Africa is no exception. Predictions by the World Economic Forum suggest that the African economies will contract by about 4.4% in 2021 as a direct result of COVID. The pandemic and its ongoing after effects have put enormous pressure on the financial advisory firms to accelerate their technological capabilities. Having the right tech stack at your disposal will continue to be key to success and enable business owners to innovate and fast-track their strategies. The COVID-19 pandemic has precipitated a race among African banks to become fully digital as consumers increasingly demand more personalized services across multiple channels. Africa's fintech industry has shown a remarkable trajectory growth in recent times, having undergone a radical transformation. Many African countries have accelerated their digital transformation, and telecom giants are building new networks and streamline existing facilities to speed up connectivity and improve internet and wireless services. The digital transformation of financial services has disrupted traditional banking, and the steady stream of fintech startups opened their virtual doors for businesses, spurred by new favorable regulations by governments. Today, new financial technologies are penetrating the manufacturing sector, including, for instance, retail, telecommunication, pharmaceuticals, and agriculture, exerting their influence on the segment of insurance, lending, accounting services, mass appraisal of real estate, asset management, investment, tax administration, and so forth. Government and regulatory organizations are showing increasing interest in them. Their close partnership is determined by the operational solution of emerging legal issues, the speed and the breadth of the promotion of fintech products, comprehensive solutions to security issues, increasing their financial literacy and population, as well as the vulnerability of financial services. But just to share a little bit about some of the facts, the spread of mobile phones and the mobile internet in Africa has played a huge part in laying the groundwork for fintech to grow. The mobile penetration rate of 82% makes Africa one of the fastest growing mobile markets globally. As a result, today Africa is the global leader in mobile money, which has become an important component of Africa's financial service landscape. Increasingly, Africa's fintech startups are moving from focusing on niche areas such as payment, lending, insurance, and investment to offering a wide range of complementary services. Total funding of fintech companies in Africa increased in 2020, demonstrating the sector's strength despite the COVID-19 pandemic. According to Disrupt Africa, fintech is the most dominant component of Africa's startup space, with the majority of startup funding over the past 4 years growing into this sector. And for the past 6.5 years, a total of 277 African fintech startups have raised about $900 million, more than twice that raised up startups in other space over the same period. Those would impact the regional value chain, the green economy issues, productivity of the health, manufacturing, agriculture, tourism, financial, transportation, education, and other sectors. Mobile network operators have dominated mobile money services in Africa for the past decade. More recently, we have seen that fintechs have established a solid footing in the market, and a number of banks are beginning to compete aggressively for the mobile banking customer. The rise in mobile and digital banking is likely to surpass the banking sector revenue predictions on the continental scale, which are expected to increase from 86 billion US dollars in 2017 to 129 US dollars billion in 2022. Mobile and digital banking accounts for around 99% of transactions in Nigeria, for instance, the continent's most populous country, and dominates, even in South Africa, between 90 to about 95%, where banking penetration is relatively high, according to a 2017 estimate from the consulting firm of McKinsey. Fintech has the highest penetration in South Africa, with 94% of individuals having regular access to internet. 67% of South Africans have a banking account, and the mobile phone penetration is over about 100 for every 100 people. Fintech investments, for instance, remained strong despite the COVID-19 pandemic. The number of deals increased in Africa, whereas total funding volumes in Latin America and India were lower than expected due to the slowdown of the larger stage deals. In Africa, there were 94 disclosed deals in 2020, amounting to a total of 1.3 billion, compared to 74 disclosed deals amounting to about 1.04 billion in 2019. But of course, with all this, there also have been some challenges. And this, despite the technology advancement in the fintech sector across the continent, there are some noticeable challenges of implementing. And some of them would include weak digital connectivity. Africa is the region with the lowest internet usage in the world, with just about 28.2% of penetration out of the 87% of individuals online globally. 34% has access to broadband and connectivity, achieving universal, affordable, and good quality internet access by 2030 will require an investment of about 100 billion US dollars. Secondly, there's also a limited infrastructure. While the internet is likely to be a huge accelerator of fintech, as it reduces transaction costs and brings financial services to people to remote locations from the nearest financial services, adequate infrastructure to support fintech services such as power, telecoms, network, broadband technology, and the quality of IT itself remain quite, as an issue. It's actually a difficult area. Those are some of the areas that needs to be looked at. Thirdly, we also have the issue of the high cost of bandwidth. The biggest barrier of African fintech startups today is the high cost of bandwidth. For instance, 1 GB of data costs about 5.8% of one's average income, with some countries having rates as high as 20%, which is way above the 1 to 2% deemed to be affordable. Sudan is the cheapest country in the region in terms of the average cost of 1 GB of mobile, which is around 0.2%, 0.27 US dollars. The fourth is the issue of cybersecurity. With the development of fintech and the rise of virtual currencies such as Bitcoin, which do not depend on issuing institutions and have no legal status, cybersecurity is the biggest concern when it comes to financial transactions and services. Mobile money fraud intrusions, attacks, money laundering, and terrorism are the major concerns on the continent and could put Africa in a danger. And finally is this issue of skills and digital literacy. Significant percentage of population, especially in the rural regions, require assistance when it comes to gaining access and to hassle-free experience to fulfill their financial requirements. And therefore, to address all this, I think, as depicted in the agendas of the summit, the virtual gathering and the expo with a good opportunity will be a good opportunity and an ideal platform to discuss on the main issues of advances in the digital banking and the potential challenges in its implementation, in how to improve financial inclusion with the mobile banking, how the 5 GB technology will change the banking sector, how to develop an inclusive digital payments ecosystem, harnessing digital technologies to enable sustainable finance, applications of artificial intelligence in fintech, and how technology is changing in remittance of industry. Now, just talk about a little bit on ECA intervention. ECA's role as a convener at the regional level commits to working with the countries through several initiatives to foster prioritize financing for building digital infrastructure, working digitized payments in every sector, and putting in place regulations to ensure that digital financial services can be used to everyone and everywhere, among others. ECA is supporting member states to review their national and sectoral e-strategies with regard to harnessing the digital economy in general and promoting e-strategies for businesses and finance in embracing the new and the emerging fintech. Financial, for instance, the financial technologies and digital payments in the context of the Africa Continental Free Trade Area. This interconnectedness through vehicles such as the FCM will create an attractive market law, an umbrella law that will cover fintech entities that operate in fintech, an ecosystem that affords powers to authorities to grow presence of companies in the region and as well as operating abroad. The disruption of technology such as mobile banking and telecommunications, digitization of financial services, 5G technology, application of artificial intelligence in fintech, blockchain in trade finance, adoption of cryptocurrencies in the sector, blockchain of financial inclusion, regulatory landscape of blockchain and digital assets, digital bank, central bank digital currencies for regional payment systems, dealing with the new data security challenges, developing a culture of cybersecurity consciousness, digital technology risks for finance, blockchain and cybersecurity capacity building are some of the key activities that the center is also giving emphasis in providing capacity in the financial sector within the continent. And as I conclude, training, engaging and equipment the citizens as well as youth in the digital technology areas would have a paramount importance in the application to the above technology into the fintech sectors. In this regard, ECA and its as partners is supporting the development of the academic institutions and research centers such as the Africa Research Center for Artificial Intelligence, which is going to be established in Congo, Brazzaville. And that will help contribute in the roles of materializing the inclusion of digital technologies like artificial intelligence in the financial sector, bringing the desired outcomes. At ECA also, we stand ready to coordinate the development of a regional regulatory framework for fintech to assist policymakers in creating awareness on the new operating models and consider review of the existing regulatory framework in the light of the new and emerging fintech digital economy. Please, let me finally say that allow me to again commend and congratulate the Sudanese government and others that have been involved really in organizing this excellent summit that brings together enormous impact on the fintech initiatives and development innovations throughout the African continent. I thank you.
Thank you, Oliver, for coming in and giving your wise, knowledgeable presentation. So, Oliver, what do you think is the future requirements in Africa or specifically in Sudan to be fully equipped technically?
I think what I see as some of the requirements broadly on the continent is really the enhancement of the infrastructure. I think that's an area where we see a lot of weakness in that. I think we need to improve the infrastructure that's required to support the digital technology on the continent, and particularly for fintech. And I think that given the capacity that Sudan has, I think those are some of the areas it also be able to look into to see how the infrastructure could actually be built and be enhanced, but also increase the penetration so that all the citizens will have access to all these initiatives that have been put in place by the government.
Thank you, Oliver, for your time, and I hope to meet you in person soon.
Thank you. Thank you. Have an excellent summit. Thank you so much.